Hello, everyone. Welcome to the October 2021 market update. I'm Tony Marlette Jr., advisor at Brookside Tax and Financial Group. We're already moving into the fourth quarter. Fall appears to be in full swing already. And speaking of the fourth quarter, it is usually our most profitable quarter of the year from a market perspective, that obviously being driven by the holiday shopping season. October itself, on average in the markets, you look to earn about 0.8, 0.9% historically on average. Before we get into what we could see in October, let's take a look back at what we saw in September. September actually broke a string of 7 consecutive positive months for the market. So the Dow Jones was down 4.2% for the month, the S&P 500 declined 5.2%, and the NASDAQ Composite declined 6.7%. Even with all that being taken into consideration, though, we have really strong numbers over the last year. The Dow Jones at 19% year over year, the S&P 500 at 22%, and the NASDAQ Composite at 23%. I think we're in a really interesting time if we look forward to October, where there's many different types of risk that are going to be presenting themselves. And a lot of times when I say risk, or when I talk to clients about risk, they assume it just means market risk. And that's understandable. Market risk is always there. It's always evident. Simply the possibility that your investment decreases in value, and it really can be due to a number of reasons. But let's take a look at some 3 other types of risk that we can expect to see in October and really going forward. So number 1 is inflationary risk. And inflation is nothing more than the cost of goods and services that rise over time. We saw a period of pretty much no inflation or negative inflation, but our current pace, we could see 5% inflation per year, which is double our historic average. Historic average is about 2.25%, 2.5%. And again, this affects cash balances greatly, because if you're not keeping up with rising costs, you're losing money. A lot of people will think, well, if I bury some money in my savings account or something that's not earning anything, at least I'm not losing it in the market. Well, that's true, but it doesn't mean that it's risk-free either. You do have inflationary risk involved. The second type of risk that really is pretty prevalent right now is interest rate risk. And just last week, the Fed has announced that they're going to leave rates unchanged until probably the end of 2022, maybe even early 2023. However, their bond buying program is going to be tapered or reduced, and that will eventually drive rates up as well. And a lot of people have bonds or bond funds, maybe in their 401k. Rising interest rates will devalue existing bonds and existing bond funds. So we can take some of that off the table by diversifying into different types of bonds and different maturities, or preferably taking them off the table altogether, keeping some money in the market with a floor in a ceiling approach, where you're not losing any money in the market, but you're capped on the earnings. That can be a nice replacement for bonds when we see interest rate risk prevalent like we do right now. Last type of risk that we're seeing that's really prevalent is legislative risk. So this is what's going on in DC with policymakers. So a couple of actions really roiled the markets in September. Just the possibility of a government shutdown drove things negative. Obviously, that was avoided, but the debt ceiling was not raised, so we're not out of the woods yet on that. There's also debates on infrastructure and social program spending that keep going back and forth. These things do affect the markets. Even a whisper of some of it can affect the markets. So when we look at all 3 of these things, inflationary risk, interest rate risk, and legislative risk, volatility and corrections should be expected going forward. Fear-based investors are going to add to this by selling. Diversification is going to be your key. You're reducing your risk by diversifying. And if you give us a call, schedule an appointment, we can show you exactly how that would work. And you see our phone number on the screen. You can also go to our website to schedule an appointment. If you reference this recording, you can schedule a cost-free strategy session. So again, I'm Tony Marlette Jr. with the October 2021 market update from Brookside Tax and Financial. Look forward to speaking with everybody soon. Thank you.